morning, my name's James Hughes, Chief Market Analyst here at Scope Markets, and this is your daily briefing on Wednesday, the 3rd of June. Unrest continued across the US last night as protesters defied curfews in many cities. President Trump yet again totally misjudged the mood of the American people as he tweeted that he had done more for the black community than any other president since Lincoln, and that the best was yet to come. This comes a day after Trump authorised the use of tear gas to move protesters in order for a photo op in front of a church holding a Bible. Markets remain defiant and traders are still buying into the rally on Wall Street. Historically, unrest such as what we've seen has not really affected markets and has been widely ignored by equity markets. Instead, investors continue to focus on the reopening of the economy and how quickly that will have an effect on the bottom line. The biggest reason markets remain in buoyant mood is due to the stimulus pumped into the economy from the Fed and the US government, as well as central banks around the globe. The Fed has already cut interest rates to zero and has promised to add yet more stimulus whenever the economy may need it. The balance sheet, which the Fed had worked so hard to reduce over the last few years, now stands at an eye-watering $7.1 trillion. The Fed's presence in the market has enabled companies to restructure debt at incredibly low rates, meaning major corporations have managed to build cash stockpiles in order to fight their way through this crisis. It seems that for traders, this outweighs the negativity and political uncertainty that now clouds other areas of the United States. Later today, we will get further reading and indication on how many jobs were lost in May in the private sector. The ADP payroll is expected to show that another 9 million people became unemployed. This starts a busy few days for jobs as Thursday sees the weekly jobless claims reading, and Friday will have the full jobs report, including the non-farm payroll. Today we will also see a raft of data out of Europe in the form of services PMIs, and later we will get the ISM non-manufacturing PMI from the States. Today we'll also see the first rate-setting meeting for new Bank of Canada Governor Tiff Macklem. However, no big changes are expected. The loonie has rallied strongly over the last couple of days, especially against the greenback. However, any mention of negative rates or further QE will be key in that performance continuing. Despite a contraction in GDP of over 7%, the economic outlook has been fairly upbeat for the coming months in Canada.